Is Big Lots 6.62% dividend yield safe? I'm going to answer that question in this video, so let's get right into it. As of this filming, Big Lots dividend yield boasts a healthy 6.62%. So it's understandable that dividend income investors are attracted to this stock. But what you need to know is if this dividend is sustainable. Will it cut this dividend sometime in the future or pause or reduce it? That's what we need to know, and I'm going to look at a few metrics to answer that question. The first thing I want to look at is its revenue growth going back several years. I want to look at how sustainable the business is and if it can continue maintaining this type of revenue and earnings growth. And looking back, it does look like the business is sustainable. It's not in an industry that's crashing or going away. You could think of one like Redbox, right? That DVD rental company, that's going away, right? So I want to check for something like that. Is it in that kind of an industry? Is there any evidence of that? And I'm not seeing that with its revenue. It was relatively steady, and then after the outbreak, it really, I mean, this chart makes it look like the increase was bigger than it was. It actually just went from a little under 5.4 billion to 6.1 billion, so a 700 million increase in revenue. But this chart just makes it seem like the revenue just exploded off the map. That's not the case here. It just went up by about 20%, it looks like. But it's good to see that revenue is growing, and the discount retailer is, in my opinion, going to be popular for the next few years as inflation pinches consumer budgets. They're going to look to get more bang for their buck, and the brick and mortar discount retailer Big Lots could benefit from that consumer trading down behavior. The next thing I want to look at is the actual dividend per share. Yes, it had a very good dividend yield, but I also want to look at what's the dividend per share and what's been the history of the dividend per share. What's the company's policy that can be observed from the dividend per share? Does the company increase the dividend per share every year, every quarter, every so often, or does it keep it stable every year for a long time? So to answer that, let's look at its dividend per share history. Going back, it only really started a dividend in 2014 in earnest, and that dividend has been growing very nicely from less than 40 cents all the way up to $1.20. So it's demonstrated a willingness to increase its dividend per share. Also, usually when companies just begin instituting a dividend, they usually start it at a conservative rate because they don't want to start and then stop and reduce their dividend, right? Companies hate to do that because they know that investors, income investors, are relying on that dividend payment. They really hate to pause or reduce a dividend payment, so they try to be conservative with their dividend payout policies. And Big Lots is certainly started conservatively and is growing its dividend per share of $1.20. Now, I want to look at how sustainable this dividend per share is in terms of its profitability, because remember, dividends are paid out of earnings per share. If a company doesn't have enough earnings to pay dividends, then these dividends are being paid from a company's savings or the company's borrowing to pay dividends, and that's not sustainable at all. So what I like to see is earnings per share that are higher or much higher than dividends per share, and that tells me that the company can continue paying the dividends because they're way below its earnings. And so even if there's a fluctuation in earnings because of some recession or some negative consequence should befell the company, it will still keep its dividend per share under its earnings per share. So let's keep this figure in mind, $1.20, and let's look at its earnings per share. Very good earnings per share. So in the most recent quarter, earnings per share, in the most recent year, I'm sorry, earnings per share was $5.33. And if we compare it with the dividend per share of $1.20, it's a very much a sustainable level, right? It's very much a sustainable level, even after coming down from the boom in profitability ever since the pandemic, of course, was a boom for Big Lots. All these consumers with stimulus checks and fewer places to spend money, Big Lots was a big beneficiary of that. But even at the longer long-term level, right? This is about where it was, its earnings per share before the outbreak in 2019, let's say a little below $5 per share. So even at that pace, it's still well above the dividend per share. So to answer the question, is Big Lots dividend yield safe? Yes. The answer is yes. Its dividend yield is safe. All right, so that's all I've got for this video. Thank you for watching, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.